On mute.
Well, thank you. Hello and welcome to Moneycontrol. You've tuned into IPO Watch and I'm your host, Nickey Mirchandani. Well, today we are here to talk about the company, Affordable Housing Finance Company, India Shelter Finance Corporation, which is backed by WestBridge and WestBridge Capital and Nexus Venture, essentially. It's going to be floating in its IPO on December 13 to raise around 1,200 crore rupees. Now, the price band is fixed anywhere between 469 to 493 per share. And the IPO essentially consists of fresh issue to an extent of 800 crore and OFS to an extent of 400 crore. Catalyst, Trusteeship and Nexus Ventures are the biggest selling shareholders within this OFS. But to know more about the uniqueness, the business strategy, financial profile of the company, we've been joined by Rupendra Singh, who is the Managing Director and Chief Executive Officer of India Shelter Finance Corporation. Thank you, gentlemen, for taking out the time and having this conversation with us.
Thank you, Nickey. Thanks for having me on your board. Thank you so much.
All right, I'm straight up going to ask you about your AUM growth, the CAGR that has been captured to an extent of 41% from FY21 to 23. What are the key drivers for this AUM growth? How seasonal is this growth to begin with? And also, talk about the diversification also within your AUM, because it seems like a regional focus growth that we're looking at.
So just to give a little background of company first, we started operation in 2010 from Rajasthan. And Rajasthan, we started from 2 locations and then spread our wings across country. So today we are in 15 states with 203 branches. Since Rajasthan was the first zone to start a business, automatically the AUM percentage there are on higher side compared to the rest of the places. But having said so, there's a scope and the traction which is coming from rest of the places also. So when we see the AUM growth, if we see this is a consistency from last many years, that's a trend around. And this all because the distribution is well set across these branches. The controls are very well mechanized from day one. The usage of technology in terms of making the entire process paperless from login to disbursements and the distribution with the right set of people who are sourcing directly. These are the few key items which are supporting for the consistent growth around that side. Additionally, the market in affordable segment is responding very well. There's a lot of demand which is coming in market thanks to good schemes by government like Pradhan Mantri Awas Yojana and support by the banks and institutions like NHB. These are the support items which making this ecosystem worthy in terms of growth.
Sure. Talk about your AUM growth. It's been at 41% from FY21 to 23. Do you expect to outperform that number or continue to grow at the same pace?
So in our business, there are 2 important things. One is distribution and the productivity. So on the distribution side, we are available in 94% of market. And additionally, we can add up many branches in coming times also. Every year, we are adding 35, 40 branch in these locations where we are available. Secondly, the productivity from each branch is also going up. So as a momentum from both sides, they are going to contribute the growth around that side. Exact number will be more like a forward-looking statement, but yes, the trajectory shows that it is on a right path.
So is 40% growth sustainable in that case?
I'm very hopeful and confident about that side.
All right. I'm also going to I was just going through your RHP where I read about your business strategy. Of course, you intend to grow and diversify your distribution network to achieve deeper penetration. This would be in which all geographies? Right now, the 3 states contribute to around 62.7% of your AUM for 6 months ended September 30. Talk about the diversification now that you're looking at.
We started Rajasthan, so earlier we had entire concentration in that place. But as we start spreading in the other places like MP, Maharashtra, then eventually to Karnataka, Tamil Nadu, now effectively with 15 states, the business starts mushrooming on those localities also. So Rajasthan with 90% has diluted to the 30% level, which can further dilute it, though the trajectory of growth is remain consistent there. So the rest of the places where there's a demand in mortgages are coming in a big shape. So we expect the same numbers coming from South also, as well as some territories from West. There's a lot of demand in housing per se. It is expected by one of the bureau report that there's a shortage of around 9-10 crores of houses in country. So if that is the demand which is coming, and this demand is majorly coming in tier 2, tier 3 market, which is targeting LIG, MIG segment. So this is the exactly segment which we are also catering to. So with this demand coming up, there is a lot of vacuum in terms of generation of credit that side, and here our roles comes basically. We feel this kind of demand. There are many companies like us which would be required to meet them. So I think that's a big opportunity for us, and on basis of that, the penetration is expected to go in this state, and obviously the growth also.
Sure. Talk about your loan portfolio. Essentially, the company highly gives almost 56.5% of your portfolio is essentially towards segmenting. The target is first-time home loan takers. How secured is this line of business lending versus the other business? How insulated is your asset quality? Talk about that.
So, as a mortgage company, there is a security in terms of property which customer offers. So we have two sets of loans which we provide under this. One is a home loan, and other is a loan against property. Home loan contribution is approximately 58, and we want to take it to beyond 60%, which is also a regulatory requirement one way. And the other loan which we look for is a loan against property. There also we want to continue in a tune of 39-40%. The security, underlying security, is a very good instrument to safeguard the loan for a long term. Normally, loan LTVs in this particular category ranges from 50 to 52% in a blended form, whereas the home loan category we fund around 58 to 60%, whereas for loan against property we fund around 45 to 46%. So these are the LTVs which we play around. So there is a lot of skin in the game from the customer side, and as well as a lot of equity they have to put while getting a new home. And on other side, they get a long-term loan from institutions like us. So it's a win-win situation, both from customer as well as from institution side.
Do you intend to change that loan mix anytime soon?
So we are improving day by day. We want to take it up to 60% home loan. So the gap is not much. There is hardly a gap of 2-3%. It will be able to do in a very short span of time.
Within this financial year is what you're looking
absolutely,
at. That's 60%.
Absolutely. That's a thought. And that's a requirement of regulation also simultaneously.
Sure. Let's talk about your asset quality. We've seen some amount of improvement. At least on the books, your asset quality has significantly improved. Stage 3 assets percent has come down from 1.92 in 2021 to around 1% for the 6 months ended 2024 financial year. What explains this, and what can be the growth now in asset quality number? Do you expect to stay steady around that level and still build on to the profitability? Provide us some color on that.
So, in our case, the asset quality is normally more tighter than the rest of the other set of class of business in this category particularly. One major reason is the underlying security in terms of mortgage with customer offers. So in 13 years of history, we operate around 1.2, 1.3% of NPA levels, what we have seen from many years. Except the COVID time, which is the 2 years which was tough for every industry and obviously for us also. So there the asset quality deteriorated and has gone to the level of 2.5 approximately. But as the clouds of COVID disperse, there's a back in improvement in collection efficiencies, and customer also start repaying who got affected badly in their business cycle because of COVID. So there's a lot of traction which has come up, and now what we see it is around 1.1%, which hovers around. And we feel the kind of market tendencies are euphoria is there. We feel that this is the traction which is going to happen for quite some time. But in long term, if you see, this asset varies anywhere between 1.2, 1.3% at the max when it's about the duration of quality in normal circumstances.
All right. You spoke about your asset quality. Now let's focus on your NIM performance. It's been on that steady state basis, at least at 10%. Your RHP says that the business is affected by volatility in interest rates, both for lending and treasury operations. Give us more guidance on the profitability path. What kind of NIMs can be expected going forward for 6 months ended? Of course, you've reported in the numbers. Talk about FY24 numbers and the growth guidance thereon.
So this business main resource for us is the capital and cost of fund. So thankfully, we have a support from NHB where around 18-19% of our funding comes from NHB, which is at a low cost compared to what we get from large banks and FIs. And this is again a long term. Having said so, if we see the overall cost of fund, that remains somewhere between 8.6, 8.7% for us, whereas the spreads are in tune of 6%. So the spread on this one side is 6%, but overall NIM, if you see the fees and incomes added to above that, that ranges between 9 to 10%. And this is in continuous from last many years, and this is the way the business has been operated. So since we source directly, we engage customer, and there on by virtue of giving a better service, we get a better rates also. And on the other side, we have a tight control on the treasury also, and support from institutions like NHB that also help us out. So able to maintain these spreads of 6.5%, and eventually the NIMs of around 10%.
Sure. Let's also talk about your capital adequacy ratio. It's come down from 17.8 in 2021 to 51.9 presently. Post the issue, what the number will look like?
So typically in housing side, where the risk weightage is quite high, the focus is more on the leverage particularly. So if we see the September leverage are around 3.5. So our always focus is how to make sure that in the ecosystem where we operate and what kind of leverage we should operate, keeping in mind everything very well intact optically also. So it is expected that leverage of around 4 is comfortable by the ecosystem, which include banks, rating agency and all. So we are quite near to that leverage. And this is one of the factor that we have come for a primary issue out here. So with this issue, our net worth will cross beyond 2000 crore and leverage will come down. And then we can request and go forward with our persuasion for getting a rating upgrade with the rating agency, and automatically going to help in reduction of cost of fund. So more than CAR, our thought is always on the leverage side, particularly when we are operating, companies in particular in the housing finance sector.
So any particular number that you're looking at?
So immediately this leverage will come down from 3.5 to less than 3. But I think it's a matter of another 12 to 18 months we'll be back to 3.5, and eventually we would love to go at a higher level, which should automatically bring a better ROEs around this.
Your cash flows also have been negative from operations, at least for the last 3 years, and also for the 6 months ended of this financial year. What explains that? What can be expected going forward?
So this is an inherent tendency of a lending business, basically, because you raise a fund and you have to give advance in the market. Sure. So there's always a gap around that piece in a growing business, basically. So this is not a issue which is more on the operational side, but it is on the accounting matters which works around that piece. So ultimately, this is business is profitable and which you are running around.
Okay, then let's get the concepts out of the way, but let's talk about your business mode, because your AUM thus far has been better than most of your peers. Just looking at the peer group comparison, 6 month ended, your AUM growth was around 43.3%. And something in the like of Aadhar, Housing Finance, Aavas Finance, Aptus was in the range of 20 to 30%. What explains this kind of growth? How sustainable is this growth, and what are the levers of these?
I mentioned there's a lot of demand in market, typically on the housing side. And if housing is growing, then automatically housing finance industry, particularly industry where we operate into, that have a chance to grow in those directions. So from beginning, we have a strategy to have a structure which is covering pan-India operations, basically. So we are one of the very few companies which have operated from day one across country. Now, with 15 states, I think we cover almost 94% of market. So this gives the levers around that piece to go deeper into market, to have a more penetration in those markets and build more branches and get a more volumes. So this is an added advantage which we have. Secondly, from beginning, we have a right blend of technology with people. So ease of doing business is our mantra when operating in field. So giving a better turnaround times in market to the customer. So our turnaround times for login to sanction is merely 3 days. So actually we are giving justice to customer in 3 days of time for his loan requirement, whatever it is. And eventually another 3 days to disburse that case. So this brings a lot of traction there. And third, important engagement with customer directly. So depending upon field force, instead of involving the third party intermediaries, This brings a lot of push from our side, and hence better execution and getting the desired number which we look for.
All right, and you expect the outperformance as compared to that of its peers, at least, to continue going forward too, right?
So depending upon the technology and blending with people, our distribution, which is fairly well spread across 15 states, and direct sourcing, these are the three factors which is giving a good impact around. And that's our
what
USP
is your
also.
strategy?
And that's our USP also.
That's exactly, yeah, I was exactly going to ask you the same question, that, what's going to be a strategy that can drive this cutting edge for you? But you've answered that question. But, the last question that I have for you in that case is Catalyst Trusteeship and Nexus Ventures, of course, are the top biggest selling shareholder in the OFS for the IPO. But in terms of WestBridge Capital, the promoter also in that particular instance, any kind of lock-in period for this one, how can one look at?
So three major investors which we have: WestBridge, Nexus, Madison. WestBridge holds 56%. Nexus is holding 28%, and Madison is having 10% stake in a company. WestBridge also have a promoter tag, and they're not selling anything in this IPO, and they do have a regulatory lock-in for next 12 to 18 months. Since a perpetual funds, their commitment is for a pretty long time, and since fund life is infinite, so they have that belief in this company. They want to continue for next decade or so. This is the thought for the WestBridge side. Nexus is again one of the oldest fund which has invested into India Shelter way back in 2012. Their fund life at some part, so they'll be diluting around 15-20% what they are holding today, and after that they'll not be locking for them. That is one thing, but they have a good interest in the company. Madison is a third fund holding a 10% currently, and they are going to shell off around 40-50% what they're holding this company basically.
All right, Mr. Singh, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you so much, Nickey, for hearing us. Thank you.
And also all the best for your IPO. It comes up for subscription, of course, on December 13th. So that's going to be one that you need to watch out for. But with this, it's a wrap, and goodbye.
Thank you very much. All the best.